Okay, so let's look at the results for year four, and we see that we have a range of points from 658 all the way down to negative 73. The top gross profit margin is 59%. From round 5 and round 6, you want to strive to be in the 60 percentile or higher of gross profit at this point. So again, anybody below, so now I only have 3 teams at or below 40%. Last time I had 6. So some people are paying attention. And remember, you need to get this profit margin much higher than 40%. It needs to be closer to 60% or higher moving forward for the last 2 rounds. Stock prices, we have some people approaching 100. We should see many more students over 100 by the end of the simulation. And if we look at total points, we have a few teams that are only a couple hundred points away from getting the full, which they should probably land on round 5, have the full points to complete this project. Everybody who is 1,800 points or above, which is more than 2/3 of the class, you just have to get, let's see, 350 and 350 should be enough to get you there. So a minimal amount of performance for the next 2 rounds to get to that 2,500 points. So you guys are very close to getting there, which is great. So people are really doing well with the simulation and understanding it, and basically running a company using your strategy and what you've learned in business and maximizing shareholders' wealth to increase profits. It's what business is all about. So it wouldn't be fair for you to graduate business school unless you had an opportunity to run a business, a simulation of a business, so you have an idea of really how everything works together. Like I've been saying in the lectures, if you've been watching the lectures, I've been talking about the simulation in the lectures, giving some hints and points about the purpose of the simulation in there. Um, Judging by the view count on some of my lectures, I can tell only about half the class is actually watching the lectures. The other half of the class, or the whole class, I guess, is focused on the assignments. But if you're really not watching the lectures, you're really missing out on the real meat of this online class. Okay, so we can see net profits per team. We see this nice upward trend with many teams getting over 120 million for the fourth round. And if we see points per team, they're kind of leveling off around that, like I said, that average 400 point level that most teams are getting each round, which you're striving for. And like I said, the first year is the easiest year to earn points because you're working, your year over year comparisons are from bad management the year before. Every other year after, you're trying to beat not just your competitors to gain the market share because you're all competing against each other to get the cars you need to sell. And if one company sells a lot of cars, it's taking it from another company in the industry. So you're all competing against each other and competing against your year over year results. Okay. We see the stock price, like I mentioned, we have 3 teams here, and we have a new lead team in stock price. Um, I'm not even going to try to pronounce that, but they are close to 100, as are the Sim Car Company and LG Mojo. So and also AII Auto is in fourth. So we have a lot of teams in this upper, close to breaking 100. We have some teams down here. This team was able to wake up and get from last place to third place. So this team is making good strides in improving their stock price. And we have a bunch of teams in the middle here. So stock price for all teams have been going up this round. Now, if we look at the sales per, so we have a new leader in sales here. We have MUF with almost 700 million in sales, and then we have our second and third place. It looks like second place is our previous first place team, I believe, and there's actually 2 companies in there. And then we have Autocratic Autos moving into third or fourth place here, from coming from in the pack from behind, making a breakout. And we have a couple teams here that greatly improved their sales, and they must have really improved their forecasting. And this team, I think, is just someone who abandoned the class because they're not processing their information each round. So they're, and Auto 1 has made a nice improvement. Okay. All right. So earnings per share. We had one company drop. This company dropped greatly in earnings per share. They needed to really focus on maximizing shareholders' wealth, increasing profits. We had a few companies here. This company had a huge increase in earnings, and we have sort of a three-way tie up here between three companies, all in the $15 area of earnings as a top earnings per share. Okay, so that's it over the chart analysis. So we see that companies are performing at various levels of performance here on the simulation. Now, let's see, where did I leave off in my demo? I'm typically running a year behind you. Okay, so in year 4, everybody's in year 5 now. This is what I would have done to do for me to complete year 4. Of course, I would have checked what was my previous gross profit margin. You see, I'm running at 65%, so I have to do better than that in year 4, and I have 43 and 30. And I look at all my statistics. I need to do better with my return on equity. And sometimes you can't do better on you can't make points everywhere all the time. Sometimes if I'm really focused on borrowing money to grow the company or different aspects, I'm going to get hit in one ratio or another, but I'm sacrificing one ratio to gain ground in other ratios. So I've never really seen many teams have a positive score in every ratio every year. Sometimes you have to make strategic sacrifices in some ratios to gain ground in other ratios. Okay, so I'd come in again and look over my assessment, check over my score, my percentile rank, and I'm doing excellent on revenues and stock price and gross margin and operating margin. I'm not doing so well on the total asset turnover. So I think because I accumulated a lot of assets in my operational down here in my production for my operational investments. I bought a lot of operational investments, but I did that purposely. After, I'll go back to that in a second, but remember, you should review the industry if you're not a top team. See what the top teams are doing. Learn from them. Review your financials and go back to sales. So now I've increased my operational cost reduction to 7,200, which is amazing. So I'm going to go in and start trying to make my cars and again, let's see here. And I'm just throwing some numbers here. I'm not really actually thinking about it too much because time really. But what I'm really focusing on, can I get my gross profit margins higher? So you see how I'm in year 4 like you guys were, and I'm getting my profit margins much higher than most of the people in the class because I invested heavily in my operational cost reductions. Now, one problem with that is since I invested so highly in those areas, I had not a great total asset turnover or return on assets because I really bumped up my assets by buying so many of those operational cost reductions. So that's what I was saying. Sometimes you have to sacrifice in some areas to make gains in other areas. It's strategic. You can't win in every category all the time. All right. Why is the importance factor so low on luxury? Because people don't care about a low price when they're buying a luxury car. Who wants a low-cost luxury car? You want a luxury car to say, hey, look, I'm rich. I can afford this Maserati, this Ferrari, so I'm pretty sure that's the aspect there. Okay. Let's see if I can get. Oh. All right. So I got everything above my previous year's. Put a forecast in there. I got everything above my previous year's profit margin. And now I'm going to pause it during marketing because it takes too long to make you sit here and watch me do this. But I'm going to, just recognize that as the industry grows, the advertising expectations of the budget grow too to match the size of the industry and the amount spent in the previous year's advertising. Now some students say, well, Professor Nugent, why don't you do year 5? That's the year we're in. Well, because I don't want you to copy me and just duplicate what I'm doing. So I stay a year behind you to show you it's possible to do certain things and how I would approach it. But if I do the current year that everybody's working in, then I get a lot of students who just copy me directly. And that is not good because I want you to think for yourself, have your own strategies, make your own decisions, test out your strategies and decisions in the practice, in your individual practice rounds, which you can keep working with and running on. Work with your teammates and other people if you're working with somebody else, and really, get the most out of the simulation. I don't want to really do the assignment for you, but that's why I stay a year behind, to kind of give you an idea of how I would compete. Okay, so once I put in my new production plans, my forecast, I'm going to go ahead and I'm going to update my operational investments. So I'm going to invest heavy again in my operational costs, my operational investments, because I want to make sure that I can maximize my profit margins. And this is how, spending and investing, I'm able to minimize my costs the next round and help to improve my profit margins. So I see down here I have a $40 million increase in my cash budget. So I'm going to go ahead and try and invest some of that back in the company by buying some stock, retiring some long-term, short-term debt, and some stock. Okay, so let me process the round and see how my results are. Okay, so now I am in year 5 along with everybody else. So I'm caught up to the class. And how did I do on points? I got 400 points, which is good. I was coming off a very strong year. I was able to increase my profit margin by 4%. I fell a little bit in my operational because of the heavier marketing, and a little bit of my net. So my profit margins weren't as good, and that kind of affected some of my return characteristics. But my forecasting was good, and my book value, my market capitalization, I had a surplus and an increase in my operational investment. So I did get the 400 points. So if I look at, say, my charts for this demo, which is like your individual practice. No, I don't want to look at the charts. I want to look at I want to see what is my total points. So I'll go to the industry. All right. So my total points is 2,000. So I'm sort of aligned with the class where after 4 rounds, I've gotten to 2,000 points. There's 2 rounds left. So if I get 250 points and 250 points, I'll get over that 2,500 point mark, or maybe it's 2,600. So I just need to get a minimum of 300 points each round. So again, I'm in line with expectations in the class and doing overall pretty good with this simulation. Okay, so that would be my suggestions of what to do. What you should have done in round 4 to get to round 5. Now that you're in round 5, you can see that I've maxed out my operational cost reductions, and when I build my cars for, let's see, let me just do one car. So if I build my cars for the next round, I have a much higher profit margin now. That's amazing. So this car actually got to 93%. So I probably would want to increase some of these characteristics here to make the car more competitive, and then maybe I could sell. So even if I go more the higher range of my characteristics, or I can still have a pretty decent profit margin and really increase the demand on the car. So that has been my strategy. Okay, so that's my quick little wrap-up video for year 4 for the simulation, and we have 2 more rounds to go. I wish you the best of luck. Take care.